Welcome to episode 6 of the Finance Fusion podcast. Today we have Joshua El-Baye from Shore Financial, a hungry and motivated mortgage broker coming up the ranks, coming from a hospitality background and decided it wasn't for him and he wanted to pursue his new dream. Joshy.
Louis.
Welcome, mate.
Thank you, brother.
Thanks for joining us.
No, thank you.
Mate, we'll start with how your journey in getting into finance started. You know, we've been friends for a long time. You know, you come from a hospitality background.
Yep.
Everyone knew Joshy as El Phoenician, Cafe L's, Burger, El Burger,
yeah.
And then you eventually just changed it completely,
yep.
And went into finance. We're very familiar with how that happened,
yeah.
But share with the audience as to where you started and where you are now.
So thanks, Louis. Appreciate that, mate. I'm Joshua El-Baye. I'm a residential mortgage broker from Shore Financial. I've been a mortgage broker for almost 3 years now. And as you mentioned, you know, coming from a hospitality background to where I am today, it's been a bit of a journey. So prior to mortgage broking, I was operating and managing a few family venues in the hospitality industry. I kind of knew quite quickly that, you know, to succeed in the industry, I needed to know everything about the industry. Mm-hmm. So I, you know, made it my goal to become the best kitchen hand there was that the world was to see. You know, going back into my dad's restaurant back at El-Phoenician in Parramatta.
What a spot.
Oh, mate, it was awesome. I miss that place though.
I miss it so much, mate. The good times.
I know. So look, from there, I kind of slowly built my way up to operating a fully functioning kitchen. You know, we'll serve it anywhere between 800 to 1,000 guests a night on the weekend, wow. Which was absolutely chaotic. You know, doing, you know, anywhere between 70 to 90 hours a week. As you could imagine, you know, being in the kitchen, you're in four walls. It was so daunting at times, but you know, what we did there was unbelievable. And then moving on a couple of years, you know, seeing my dad on the floor, how he worked and how his customer service was and how he just made people feel throughout their, you know, their experience at the restaurant. I guess it kind of resonated with me to want to get into that space. So mate, from there, I kind of outgrew the kitchen and I jumped onto the floor and started, you know, going down his footsteps. So he kind of taught me everything I need to know when it comes to customer service. It gets a bit excessive at times, but you know, it's just that extra step that he kind of taught me to, you know, how to treat someone that comes in and how to understand, you know, what type of experience, you know, they should be experiencing just coming to the restaurant and enjoying a good meal and a drink. So ideally from there, you know, fast forward up until when I was about 25 years old, you know, we got into a couple of cafes alongside my brother, which is El's in Winston Hills. And then we also opened up a takeaway store, which is El Burger. So I think I opened up El Burger the week after my 21st birthday, which I was still recovering from. But ideally that was a hard slog. You know, I was in there 6-7 days a week, you know, starting a business from nothing to something. We're located in the corner of a food court, you know, in a shopping centre that had all your major retail centres like Woolies, Coles, Aldi, Big W. But ideally we started to get some really good traction from a lot of the community and even outside of the community. So I think a lot of the success in the burger shop was coming from a lot of the marketing skills that I kind of taught myself and how to kind of portray, you know, a simple burger and how it can look and how it can feel and how it can taste from people just walking in. I think to me that was the hardest transition to start that type of business, because it's like, how do you draw people from outside of the area to come into a food court, into a shop that's, you know, stuck in the corner to then, amazing. You know, to enjoy it. So
I'll never forget when you first opened El Burger, you started filming their reactions.
Yeah.
So when they take a bite of the burger and how they react to it, and then you did it in like snippets, and I found that so genius, like in terms of a marketing point of view.
Yeah, absolutely.
You've done a really, really good job at that.
Thanks, mate.
Go on.
Because the thing is, like, ideally with that type of strategy that I had, it was more to, you know, the way people perceive, you know, an object online these days. It's the way you feel about that object.
100%.
And I feel as though that type of transition or that type of engagement was going to resonate with a lot more people wanting to come and try the burger.
Yeah, definitely.
You know, I maybe paid a couple customers to say, you know, this was amazing, but
all right.
But ideally, you know, it was a good type of response that we got from that, and obviously on Flow, you know, 5 years, we kind of built a brand. You know, we're pumping out almost 1,200 burgers a week, just from, like I said, a small store in the center. So then, from there, I kind of, started getting a bit complacent in the hospitality game. I was hard slogging it for 6-7 days a week nonstop. A lot of the time, towards the end of it, I got to a stage where I was a bit more complacent with what I was doing, and I found I wasn't fulfilling my goals and what I wanted in life.
Did it feel repetitive?
It felt very repetitive, and I just felt like there was just so much more to me than standing behind four walls and just engaging with people coming in and out on a day-to-day basis. Yeah. I didn't know what it was at the time. However, during that time, I was close friends with yourself and Fred, and I seen you guys excel substantially in the finance world. Like I said, I was more the face of the business in the hospitality industries. I was never the numbers man. I was never the person behind the scenes. I was always the front of mind, front of face, making sure people come in with a smile, leave with a smile, that type of stuff. I guess for me, it was just more of an understanding of what I was actually capable of doing internally into pursuing a new career. So after engaging with yourself and Fred, I mentioned, if I could become fly on the wall back at the firm where you guys initially started, which...
Sorry, let me cut. Can I jump in?
Definitely.
I just want to jump in and I remember that conversation like it was yesterday.
Yeah.
Like you came to me and you said, Louis, I'm thinking about doing something different.
Yeah.
And I'm like, Joshua El-Baye do something different. He's the master of, what he's done, the master of his craft.
Yeah.
Like he built all these businesses, he's been doing it and he enjoys it. Like, what do you mean he wants to do something different? Then when you said finance, in my head, I'm like, this guy's going to kill it. Like straight away off the bat. And I'm not just pissing in your pocket. It's because anyone that went to El Phoenician or anyone that went to your restaurants, just how you felt like, oh, great, the food's great, the environment's great, but the way you built relationships, your family built relationships with people coming in, man, if you can do that for us, finance, if you can do that in finance, you're already ahead of the game.
Yeah.
Building relationships is so important, and I just knew straight away, as soon as you said yes, and I know how committed you are once you decide on what you wanted to do, that, once you made that decision in your head, okay, I want to try something else, and I know you as a person and how you built relationships, you were going to succeed. But go on.
Thanks.
I just wanted to jump in and throw in that conversation. Yeah.
So look, look, on top of that, no matter what the situation was, if I was scrubbing dishes or I was managing a kitchen or I was operating the restaurant on a day-to-day basis, I was always found myself excelling in what I put my mind to do. So I kind of took the leap, after a couple of months of working with you blokes, being the fly on the wall every Friday. I remember rocking up at 7 a.m, having a coffee outside and leaving at 5 o'clock.
Good days, man.
They were good days. Yeah. But ideally, I think it was more for like entering that finance world. I think I really just want to understand if I was, going to engage myself with this type of industry, because like I said, I had no idea what it was about. I think becoming a fly on the wall had really kind of resonated with what I was trying to do, and that was to kind of move on from the career that I had been doing for 12 plus years. I think the lessons I learned during that period was, how to put my ego down, I guess, and how to kind of, strip myself away from that hospitality hat for a second.
100%, especially because it's been in your family for years, decades, and it takes some serious balls to say, you know what, like I'm going to do something completely different.
Yeah.
Stuff what everyone thinks about what I'm doing. Yeah. I'm going to do this for me. I'm going to back myself. So it takes some serious balls, and there's going to be a lot of people out there that have a very similar story, but don't eventually take that jump, that leap of faith to say, hang on, I'm built for something different. I want something more, what I mean? Not necessarily like hospitality isn't more, but you got to enjoy what you're doing. There comes a point of time where if that's the most important thing. You got to love what you're doing in order to succeed. You were loving what you're doing, but certain things change, and you wanted to take that leap of faith and do something different, which takes some serious guts. So it's amazing that you've done that. Sorry, go on.
No, that's fine. And look, and I appreciate that. Look, ideally, I helped a lot of people, obviously knowing what my journey is like today. I've helped a lot of people that I've befriended, a friend that we're friends with, for a long period of time, that was stuck in their current positions and didn't know what to do, kind of felt like they were trapped in a way and thought this was just their life, and they just didn't understand what direction to go in. I guess my advice to them was trust your gut. and understand what you're getting into before you fully commit to it. And what I mean by that was, just by working that 1 day a week back at your firm, I guess it kind of, taught me the language of the industry. I remember watching you for endless hours on the computer and how you would package deals and how you would speak to them on the phone. And, it kind of lit a fire inside me to understand you're actually helping, you're not just helping someone, but you're helping someone's future.
Yeah.
And I think for me, that kind of back to the whole hospitality, customer service, understanding to be the best in the industry, you need to understand the industry. I think understanding the client's perspective, goals and objectives, to how to propose a solution for them to then see it flourish once they, receive the asset or they buy the property or they take that next leap in their life. Ideally, looking back 5 years or 5 years on from today, you kind of see their life kind of change throughout that period. And I think back to when I used to watch you and when you used to bring me in meetings with you, I understood the perception of the customer service and the perception of understanding how to actually improve someone's life. Where at the same time I was improving my own life.
Yes.
I took that leap. I took the leap of faith. I took a new industry head on, got thrown into the deep end plenty of times throughout the journey. But I always found myself wanting to push further. I always found myself wanting to understand more about the industry, to engage myself with not just the facts about it all, but the understanding of why and like my true purpose as to why I want to do that. And that's to purely help people. And like I said, by helping people is helping myself excel in life. And I think that's one advice that I give, or that I gave a lot of people throughout that journey of understanding what direction they wanted to head. But man, look, ever since we were working together 1 day a week, I think it was probably about 2 or 3 months we did that. I kind of thought in that 3 month period that I had been on for 3 years, and I started engaging with some people that I shouldn't have engaged on and started winning some really big deals. Had no idea what I was talking about at the time, but ideally, it was just
along the way, man.
Yeah, 100%.
Learn along the way.
And I just kind of built that confidence though. I kind of built that confidence by listening to how you spoke and how, guys in the office spoke. And I loved the whole hustle and bustle of it all. Like it was like, I don't know how to explain it.
I know how to explain it. In Wolf of Wall Street, when it's his first day, and he's just looking around the place, and everyone's on the phones, and he's just like, I want this. You know what I mean? It's a bit different, like what we're doing versus what they were doing. Yeah. But essentially, it felt like that. It felt like when you were in the office, you were just like idolizing how the process was, how we spoke to customers, how we helped customers, and you saw the kick that we were getting out of helping customers, because at the end of the day, we're solving a problem for 100%. Them. We're providing a solution for them, and they're not paying for our service, and it's a win-win for all parties. So just you sitting behind me and witnessing all that, doing all that, you saw the kick that I was getting, and you were getting the kick the same time as well. Definitely, that's how I'll explain it. Yeah, that's the best way I think 100%. To explain it. Yeah,
and I guess from moving forward to me wanting to get into this on a full-time basis, I kind of had to just flick the switch. I remember, I think it was like 3 months or 4 months into doing it, I turned to my brother, which was a business partner of mine at the time, and said, mate, I'm out. I'm starting a new career. I've got to take the leap. And I guess that was it was the scariest and the most and the hardest decision I've ever had to make in my life.
I can imagine.
I think coming from such a journey of, from such a young age to operate and manage and become one of the best in what I do on a day-to-day basis in such a, competitive, long hours, type of industry, I didn't know what I was getting myself into. And I guess taking that leap of faith was just like, you kind of just had to do it.
100%.
Otherwise it would have just started to linger and, nothing would have happened.
What did your brother say? Surprised?
Very surprised. I had a couple of family members that said, what
are you talking about?
What are you talking about? What are you doing? Like, finance isn't you. And, like you've been doing this all your life. We've been doing it forever.
Did you get the whole, you weren't even good at maths?
100%. 100%. There was so many comments being thrown at me, but you know what, like I decided at the end of the day, I'm not doing this for anyone else. I'm doing this for me. I'm doing this for me. I'm doing this for my future. Let's see where it goes. Ideally, I had nothing to lose at the stage, you know, at that time. We had sold the shop. You know, there's still a few still a few cafes and stuff operating at the moment, which touch wood are very well. But look, for me, it was just taking that leap of faith. Kind of, I told myself, you know, if I was to take this, you know, and go 100 miles an hour with it, I need to go head down, and just go with it.
Oh, you went head down, mate. I just want to talk about like the differences between people starting out in finance. So you've got me, and you've got you as an example, and a couple of other people that have started with us. There's two different types of people when they start finance. Number one, I didn't speak to a customer for a year. Do you believe that? I was so scared to talk to any customer. I was literally sitting in the office, and just my mentor at the time, David Cray, he just sort of taught me everything that I needed to know about commercial finance, how to read financials, how to understand business, how to package up credit proposals to lenders, all the things that are very lacking in our industry. That's what I spent doing the whole first year of doing finance. Essentially, I was so scared to speak to people about finance, but looking back, I shouldn't have been. And then you've got you, when you decided you went full time, I remember you coming to me saying, I've got this guy here, I've got this guy here. I'm like, man, slow down. What are you doing? What are you doing? But like, it just goes to show, like, you know, you don't need to know everything, you know, and that's the best way to learn. Just throw yourself in the deep end.
100%.
Because you might stuff it up. You know, you probably are going to stuff it up, but you learn quicker,
definitely.
You know, and if you're putting yourself constantly, you know, in a zone where you're not comfortable, you know, you're going to get used to that feeling, and, you know, you can grow as a person or as a broker or whatever you're doing. If you're going to constantly put yourself in a situation where you're uncomfortable and doing the things that no one else is doing, and you get used to that feeling, no one's going to stop you. 100%. That's the way I look at it.
And you're 100% right. And you know what, like I can say, just starting as a broker, like I said, getting into the industry, I had no idea about. You just had to throw yourself in the deep end. I think you just really had to kind of, you know, take what you could on board and just roll with it. Don't get me wrong, I did stuff up quite a few times, but I guess you don't learn your lessons until you make them.
I think I remember it very, very clearly. It was just like, I was like, Josh, just don't overpromise. You know, don't say you can do something, because you're still new in the industry. You don't want to be saying that, you know, this is achievable when it's not. You know, but still, you know, you went out there and you did that, and you did those things, and it's worked out well for you. Let's talk about mortgage brokering, right? Like, why mortgage brokering? You know, I'm in asset finance. It's different to mortgage brokering. But why did you decide, I want to do mortgage brokering?
I think mortgage broking, you know, came to me by, just like I said, getting thrown in the deep end. I think it was probably one of the first type of finance, you know, sectors that I kind of resonated with when starting. I think, you know, I managed to build relationships, you know, with bank managers. I managed to understand the nuts and bolts of it all, to then realize I'm actually quite good at this. And when I say quite good at this, it was, I might have not had been good at it at the time. However, you know, as the years go on, I just felt like I resonated more by helping people on the day-to-day basis. I believe, you know, asset finance, you know, you're servicing equipments, you know, vehicles, etc. With commercial finance, you know, it's more like the bigger stuff, like the industrial sites or the retail stores or etc. I felt like, you know, I've always had a bit of a knack for property, and I always felt like that, you know, eventually one day I would potentially, you know, buy my own property, you know, and get myself into that stage where I could potentially have a few properties underneath me. But at that time, I had no idea about finance. So I guess, you know, moving on, I resonated with that, and I understood, like, not many people have the literacy behind it. Not many people understand the terms and terminologies and the actual effect it can do by just understanding simple terms on how to actually get finance. And I think with mortgage broking, it kind of taught me how to express myself to these people for not, like I said, not just to help them improve, but it was at the same time it was helping me improve. So I kind of guess, like, you know, I just kind of fell in place with it. Talking to people on a day-to-day basis and understanding more about their life and understanding what their goals and what their objectives are, it just came back to the whole customer service side of things. Like, I was doing it on a day-to-day basis. it's just kind of flowing through at the moment, which is something that I've taken a lot from back when I was doing hospitality to what I am doing today. So I think mortgage broking is definitely something that I will continue to do. I think, later on down the track, who knows what happens, like by diversifying my services. I know we do that at the moment by, assisting with people that need car finance or vehicle finance, which I know you guys do quite a hell of a job at, which we've done in the past. But look, ideally for me, it's like becoming a mortgage broker. It's definitely something that, like I said, a lot of people want to kind of get into. I think it's an industry, a demanding industry where people kind of starting to realize the whole importance of it and eventually get into it.
Yeah, it's like a freaking no-brainer to go to a mortgage broker right now.
Yeah, definitely.
Like, for the audience that don't understand, you want to give us a quick rundown as to why it's such a no-brainer to use a mortgage broker?
100%. So look, you go, like you want $1 million loan and you go to a bank, or you go to a branch, and a teller comes up to you and they're like, "How can I help?" And you tell them what your goals and what your objectives are. I'm looking to buy a house. I'm looking for $1 million loan. What can you do for me? And the bank's going to come back. They're going to ask you some questions. They're going to run through some standard, your asset liabilities, what your income is, what your living situation's like, how many kids do you have, etc. Some generic questions that they're going to ask to kind of give to do an assessment based on your portfolio or based on your financial position. From that assessment, they're going to go back to their one policy. They're going to go back to their carded rate, and they're going to come back to you and say, "This is what we can give you." 9 times out of 10, the consumer comes back and they say, "This is not what we're looking for. We need a bit more." Sometimes the consumer gets disheartened, and then they're like, "That's it. The bank can't give us any money. We have to wait 6-12 months." And then when you come to using a mortgage broker is definitely someone that's going to ask you the same questions, going to understand more about you because we have an interest in what you want to do with your property side, in the property side of things. So we assess all your information the same way the banks would do. However, we go across 40 lenders. So instead of going down the track of just the one policy and the one rate, ideally we're offering a solution to provide you across 40 lenders. So different banks have different assessments, different banks have different rates. So according to what your goals and objectives are, we'll find the right solution for you. There is a legislation where we have to act in the best interest of the client. So ideally, we always have to kind of provide at least 3 recommendations to the 3 different banks that we find suitable to your financial position. Ideally, the bank's not going to do that for you because they're, like I said, they're only providing you one type of structure. Whereas, we'll be able to provide you, if you want a high borrowing capacity, there's going to be lenders that will assess your information differently and give you that high borrowing capacity. You want a cheaper rate, there's going to be second, third tier lenders, even major banks these days that are quite competitive to give you that, that cheaper rate. So I guess dealing with a mortgage broker, you're kind of, you think of it as like we're working for you and the bank, whereas the bank's working for them.
Correct.
I think understanding that a broker works for you is quite important. We're a free service to the customer. We get
that's amazing.
Which is awesome.
For me, yeah.
And I think they've made it quite clear to understand the brokers aren't out to do you over. The brokers are out there to help you to achieve your goals and
the
to
good
move
ones
forward.
anyway.
100%, definitely. And that's what we all aim to do, as a good broker and as someone that has your best interests at heart. I think understanding, what type of solution there is to progress with is the important part of becoming a broker. And I think understanding them fine terms is what a good broker normally knows.
I think the best way to explain it as well is like, let's just say you went to Westpac, the person that, the bank that you personally bank with, and you want to speak to the banker there for a mortgage. Yeah. Even if they can help you, they're not going to tell you if ANZ or CBA are doing a better deal at the moment. That's the thing for me. It's just like they might be able to service you. They might be able to give you a good lending product. However, by going to someone like yourself at Shore Financial, you have the systems, the lending policies, you have technology that assists with knowing which lender services with as well. That's the important thing. Yeah. A lot of people in asset finance, mortgage broking, whatever it is in finance, we've had a couple of situations where we've quoted a customer, given them a couple of lending options, and they said, "Hey, that's too expensive." Yeah. And I'm like, okay, what are you comparing it to? And they give us a quote that another broker has quoted them. Yeah. And I'm like, yeah, they're cheaper, but you don't service with that lender. Yeah. And they're like, what do you mean I don't service the lender? I go, try. Yeah. If you can get approved, then great. Comes back, declined for serviceability. Yeah. So there's so many things that the consumer does not know, and they can't know. It's not their job to know. You know what I mean? Exactly. So Yeah, it's just becoming a complete no-brainer because pricing's one thing.
Yeah.
You know, goals and objectives is one thing, but being able to service the loan and being able to approve the loan, they're two important things that a lot of people don't realize.
Definitely.
Hey, I saw this rate online, 6.5% or, you know, 4.99% fixed rate with this, you know, a major bank for this refinance, this cashback rebate offer.
Yeah.
You know, it's all great. Don't get me wrong, but you need to make sure you can get approval with
100%,
them.
yeah.
You know, the last thing you want to do is submit an application to that lender because they're advertising cheap rates and a good rebate and you don't service.
100%.
And, you know, the bank's not going to tell you, hey, you don't service with us, but you service with these lenders. Go to those lenders.
Yeah.
I think that's the best way to put it in a very simple way.
Yeah, absolutely. Yeah. And at the end of the day, that's why we are in our profession. I guess to understand, you know, all these policies and all these fine terms to understand where the customer's at and what the best solution is for them. I get, like I said before, the literacy and the understanding of, you know, mortgages or just finance in general for just, you know, your mum and dads or just your entry level investors. They're not well aware of this, so they're not going to understand this. Where the bank, you know, dealing with directly to the bank, the bank's going to, you know, expect you to understand all this information for 100%. You to provide them. So I guess the broker kind of, you know, breaks down, you know, every stage of the application and make you understand throughout every process of the journey through your mortgage that we're there to support you no matter what. And, you know, like I said, the bank, you know, you call a bank, you're on the phone for an hour and a half waiting for someone to pick up and then go through the whole process of, you know, what's your mortgage number, what's your account number, blah, blah, blah. Whereas a broker, you've got direct contact to them. You can message them, you can email them, you can call them at any given time saying, give me an update or ask a question that we can answer right away for you. Yeah.
Your relationship managed
100%,
for the life of the loan and you're not tied to the bank.
Definitely. Yeah. Definitely.
So like, you know, in 4 or 5 years down the track, they want to buy another property or, you know, do a property portfolio review on their situation. You're not biased towards one lender.
100%.
You're going to pick the lender that suits their needs and go from there.
Definitely.
Yeah.
And look, ideally with the way I've got it structured at the moment, you know, back at Shaw Financial, I've got a team, and the team consists of one onshore, which manages a lot of all my applications to settlement, and we've got a couple of offshore guys that look after all our data entry. I've also got another girl that looks after all my clients post settlement. So every 3, 6, 12, 24 months, we are consistently engaging with the customer to make sure that they're well aware of everything that's happening with their mortgage.
Yeah, that's amazing.
Which I guess is very important, because ideally what happens and what we see a lot in the industry is brokers do deals and then they forget about it as soon as they settle, and which is causing, you know, a massive kind of gap in the market where, you know, you're losing that business. I guess for me, building relationships is key, and it's my number one priority. Organising the process and the structure in the background is very important because, like you said before, you can't overpromise and under-deliver. I think that has resonated with me a lot throughout my journey, because it's like, how can you promise something to someone and not deliver it?
Yeah.
Which at the form, it's a form of, you know, unprofessionalism. I take it.
It's probably up there with one of our biggest core values.
Yeah.
I'll probably say it like 5 times a week in the office. It's because, like, I've been there, you know, I've been there saying, oh, I'll get it done today. Yeah. I'll get it done in 2 days. You know what I mean? Yeah. And you do it in 3, you do it in 2.5. They remember that you said 2.
100%.
They remember that you said 1. Yeah. And, you know, doing it in 3 days is amazing, but because you said 2 days,
100%, you need to deliver it.
Give yourself a buffer. Definitely. Under promise, over deliver. I put my heart on that, because if you say it's going to take 3 days and you do it in 2 days, you're a superstar.
100%.
You know what I mean?
Yeah,
so, and you know, you're talking about relationships. Yeah. The easiest way to burn relationships is providing misleading information.
Most definitely.
You know, and I've seen that in a lot in our industry. A lot of people just mislead. Definitely. And it leads to burning those relationships. You know, you've built great relationships now, and we've built great relationships because when we say something, we deliver. Yeah. Because we don't, you know, mislead people, and we, you know, don't overpromise. You know, I guess
it's the whole transparency of the industry itself. Yeah. That like I said, a lot of people don't know what they're getting themselves into. And I guess if you're not transparent with them and you're telling them one thing, they're going to believe that one thing that you say. I think being transparent is a form of building a bigger rapport with that customer for ongoing, you know, not just ongoing business, but for the ongoing relationship that you build with them.
Definitely.
But I definitely see the industry, evolving, especially in the mortgage space. I see, there's 7 out of 10 consumers are going through a broker rather than a bank at the moment.
That's an amazing start. It used to be a lot less than that. It's growing.
Much less.
Yeah.
But with the understanding of brokers having to act in the best interest of the client,
definitely.
It's just basically a no-brainer for people to start engaging with brokers than banks to source out their needs and their solutions.
What's your view, Josh? I want to ask you a question.
Yeah.
What's your view on how easy it is to become a mortgage broker? Do you think they should tighten that up? Because there are a lot of cowboys in the industry, man. Let's be real.
There definitely is. There definitely is. And look, we do see a high turnover of brokers, especially over the first 12 to 24 months.
But do you think they should make it harder to get into right now? Because of the overlap, there's just so many, and then there's so many people that we speak to.
Yeah.
And I'm sure that you've spoken to that have bad experiences.
Yeah,
right?
definitely.
What's your view on that?
Mate, look, I definitely think, the curriculum of how to become a mortgage broker, it's, they've got, the Cert 4, they've got the diploma that you need to, that you should be able to complete. I guess not finishing the diploma kind of tells a story that, you shouldn't be in the industry. Because I think wanting to understand more and have that and have a high qualification to provide professional services and mortgage advice to these clients, you need to have some sort of backing with knowledge. You need to have some sort of passion, I would say, with what you do. And I guess you don't grow the passion until you understand the nuts and bolts of it all.
Maybe not so much the certificate, the diploma, but at least be mentored, like at least work at a company. Like,
Definitely.
People get like their Cert 4 and then, they get their diploma and they start their own business straight away.
Yeah.
Like I understand they need a mentor for 2 years, but the mentor is just someone external, right?
Yeah, exactly.
They're not overviewing like every single thing that they do. I don't know. It's just something for me. I think it's getting to that point where they need to sort of tighten it up a bit in terms of either, working for longer, getting a bit more experience and just fishing out all the cowboys in the industry. You know what I mean?
Look, to your point, I do say working under someone when you first start out in the industry is very vital. I did that myself. I worked under someone for quite some time after I moved on with you guys. And look, it was really good to kind of get the whole experience. I would say the day-to-day stuff, what we're doing 1 day a week, it was good. It was good to get me, active in the industry. However, working under someone and getting that mentorship, really kind of put me in the position that I'm in today. It taught me a lot about the pros and cons to the industry. It taught me about, how to actually engage with people and also get the right advice when things come, when questions come along. And starting out into the industry, there's so many questions that you need answered. And if you don't get the right answer, that means you're portraying the wrong answer to the consumer, which is then, tarnishing your reputation within the industry. So I think it's really important to start off with someone that knows what they're doing, a senior guy or someone that's been in the industry for quite some time. I think it's so important to really have the right mentorship to make you understand the industry before you actually go out and venture off. What we do see is a lot of bankers and a lot of like financial advisors or accountants that are just over their jobs that think, mortgage broking is going to be the great escape. In that sense, they've probably got a good gist of what it's all about. But even then, I still feel like you still need experience in the field before you can actually go out in the field yourself.
Yeah, definitely.
And like I said, to your point, I think it's very important that, some sort of guidance throughout the beginning is very important to actually achieve, what you want in the industry itself. Yeah.
All right. Tell me about what you think it's going to be like to purchase a property in the next 5-10 years. Tell me what you think is going to change within the finance industry for mortgage brokering. Any new insights? What do you think is going to be the process of purchasing a house? Do you think it's going to change much with technology, or do you think it's
most definitely? I think a lot of the banks are investing a lot in the AI space, especially in the tech, even in the tech space for a lot of these, mum and dad homes or mortgages. I think it's going to be a very kind of simplified process for people that are looking to get into the market, say first home home buyers that they could literally just go online and just apply for a mortgage, without any guidance or anything. Where I see the industry in 5-10 years in applying for a mortgage, I think losing that personal touch, such as a broker, is going to be vital. I don't think it will change as much, because I think engaging with someone rather than a computer or some sort of tech, there's going to be a big gap and a big difference with what we can provide on a service-based level. I think applying for a mortgage in, say, 5 years, 10 years down the track might be simpler, but you're also going to need some guidance around that. How do you find things in your industry? Like, I know it's kind of getting to a stage at the moment, or I can see it's getting to a stage at the moment where it's gone more tech-based rather than service-based.
For me, like, it's just, if you look at the industry from 5 years ago to now, like how much new information has come and how it's moved from grey to black and white.
Yeah.
But just to keep it simple is look at credit files 6 years ago and look at credit files now.
Big difference.
The amount of information the lender has when they run a credit check is absolutely unreal. Yeah. Like, you're talking repayment history, you're talking loans, you're talking scores, you're talking inquiries, you're talking business relationships, you're talking about employment, the list keeps going and going.
Payments,
I think eventually, personally, I think there's going to come to a point where there's going to be too much information available on that credit file and what the lenders have access to. Yeah. To try to, beat around the bush or try to dodgy up anything, you know what I mean? I just feel like there's just going to be too much information available and it's going to be good. I feel like it's going to be a good thing for the industry, right? Because there's it's going to get rid of those, those brokers that are just in it to make a quick earn. Definitely. You know what I mean? Or take advantage of people, or, customers not doing the right things with their paperwork and whatnot. So I think it's going to fish that out, and it's going to streamline a lot of the process because, like, right now, like, a lot of lenders are adapting it. Like, you'll provide your assets and liabilities, right? But they're going to look at the credit file. Exactly. They got everything. They got when it's, what's the open amount. Yeah. They've got the repayment history. They've got when it started. Eventually it's going to even get more advanced. You know 100%. What I mean? What's your view on, like, the latest trends when it comes to mortgage brokering and purchasing property? Like, is there anything new that's coming out that could be something worthwhile knowing? When it comes to buying a property.
Look, ideally, banks, especially during these times of COVID, we're seeing an increase in the cash rate significantly since April last year. So it's 4% increase to where it's been over since April. So, like, what's that? The last 15 or 16 months, I think it is. But ideally, with the way rates are increasing, policies are starting to loosen. I feel. Yeah. I think, and because of the fact that on a $1 million loan, for example, back in April to what it is today, you're paying an extra almost $2,300 a month just in repayments. Yeah. So, especially coming to, like, refinancing in this market, I think banks are starting to peel the tape off and come up with policies for different types of scenarios. Self-employed,
they need to
PAYG, because at the end of the day, to be strict and be hard to actually apply for the loan due to policy just doesn't make sense. People start selling up much faster than what we're seeing at the moment, and they'll start we've got a massive supply and demand issue at the moment, so it's going to be hard for people to sell up and go rent somewhere because the rent's through the roof. So
good luck finding something decent. It's 100%. So hard to find something to rent.
Most definitely. And, like, apparently to go through to the renting stage, you got to provide pay slips, you got to provide all these documents to say that you can actually service the ongoing payment. Yeah. Which, look, ideally that is, I feel, important for that type, because it's like you don't want someone to sign a 12-month lease and have to default 6 months into it. Yeah. But I think back to your question, I think banks would definitely starting to peel the tape, and there are some really cool policies out there, especially for self-employed people, where we can provide 1 year's financials rather than the 2, and they average out the 2. There's even some really cool, if you're a director of your own of a business and you're paying yourself an ongoing wage, all you basically need to provide is 2 pay slips or even an individual tax return for the previous financial year, which that will suffice with servicing. Wow. Yeah. So rather than your typical 2 years financials, 2 years tax returns, notice of assessments, individual tax returns, if the dual service is based off your individual income that you pay yourself regularly through your company.
They don't need to dive into all.
They don't need to dive into all the companies, correct. So that's really good. That's really good for self-employed people at the moment. PAYG, you know, it's quite standard. You know, you work full time, you get pay slips that evidence your income. You know, there's some really cool streamlined processes that can, you know, we can get approvals within, you know, 24 to 48 hours if everything is available. So it's really good on our end on a service-based, you know, on a service-based level, because we can provide this type of service to the consumer. Whereas, you know, dealing with a bank, it may take a bit longer than that. Because like I said, you won't know the process. You don't know the steps that are required. The banks will think that you understand all this stuff when they talk to you.
More of a curious question.
Yeah.
So you were at another company and then you moved to Shaw. Obviously, Shaw is a very large, one of the biggest mortgage brokering companies in Australia. I love what you guys do there. I think
thanks, mate.
I think you guys are on the ball with a lot of things.
Yeah.
I just wanted to ask, like, just for the audience, is there a benefit of using, you know, and I'm going to talk not from a service point of view, tech point of view, I'm talking about rates. Yeah. Because it's very important, because a lot of people think that, you know, oh, this broker writes so much volume, he's going to get me a better interest rate. Yeah. Hand on heart, transparency wise, if I was to start a mortgage brokering arm to our business and we wanted to start doing mortgages, right? Are we going to get the same interest rates, given that Shaw's, you know, $1 billion mortgage book at the moment, and continually growing? Are rates the same? Because I think that's something that people don't understand is, are you getting the same rates as other brokers? Yeah.
So look, obviously with Shaw and the accolades behind them, you know, over 10 years operating, you know, we've written over $10 billion in loans, which is a massive achievement. I guess with that type of reputation with all the banks, you know, we do get, you know, priority when it comes to interest rates. And when I say that is, you know, we deal closely with a lot of our bank managers that give us the opportunity to negotiate a better rate than what the standard rate may be. Yeah. And that's because, you know, with some lenders, you know, there's a tiered structure. You know, you can be like an entry level broker, then you can be like a flame broker or like a platinum broker or whatever it is. And with that type of status as a broker, the banks will then necessarily provide you with, you know, some benefits, meaning, you know, it could be a cheaper rate, but normally 0.5. Normally, you know, 5 basis points or 1 to 2 basis points off the interest rate, which ideally that all adds up. You know, if you're talking $1 million loan, you know, it's almost $1,000, $2,000 in interest payments that you could potentially save by utilizing a Shaw broker. Yeah. I guess, you know, starting out into the industry and open up your own brokerage to what we can provide, it's obviously it's going to be a lot different because we've been in the game, we've had skin in the game for quite period of time, and we've also had the capacity and the relationships to obviously look after and get benefits from interest rates itself.
See, I didn't know that. I didn't know that you'll get pricing advantages. I just thought because you're like platinum broker with like majority of lenders, you're going to get quicker turnaround times. You know, you're going to have a better relationship with the credits team and whatnot. But I'm actually surprised. I didn't know it worked that way, that pricing can be an advantage by going to a bigger broker as well.
Yeah, definitely.
I think it's good information for, you know, anyone
100%.
watching that's looking at things, because, you know, every dollar counts, especially when rates are this much. Yeah. It's tough. It's tough going back to a customer saying, you know, your rate's 8-9%, and they're like, oh, I used to get 3. Yeah, and I'm like, you know what I mean? Like, it's just like it's hard. You know, it's hard.
I guess back on interest rates as well. You know, with people currently having mortgages with banks, there's a thing called loyalty tax, and no matter how long you've been with that lender for, let's say you're coming off a fixed rate, which is a hot topic at the moment, and we are on the decline of the mortgage, the fixed rate cliff. Back from July this year. So we are starting to see a bit of a decrease, and there is almost $60 billion coming off from now to the end of the year just in fixed rates alone.
Wow, that's concerning.
It is concerning. It's concerning, and that's just across the big 4 banks as well. So that's not including any of the second tier lenders. So that number could significantly increase. But ideally, you know, when looking to refinance, I would suggest to reach out to a broker for the sense that when going off a fixed rate, you're going onto a standard variable rate. And if you don't engage with your bank or broker, you know, ideally you're paying a 0.5 to 1% higher if once that conversion happens. And people aren't aware of that because of, you know, just the the transition of it all. And if you call your bank, they're going to give you a rate, and then they'll give you a discount to enter the variable. But I don't. But the discount they give you is not actually what you can get if you were a new to bank client. So it's called the loyalty tax, which is people think that I've been with my bank for so long, I'm going to get a bigger discount from them, which isn't the case.
It can be sometimes, but it's about getting that second opinion.
100%. But I guess utilizing and speaking to a broker, like we're going to obviously understand what else is on the market, and if it may benefit you, then obviously we can assist.
Yeah.
We obviously tell them to liaise with their bank prior to any form of application, because ideally we don't just want to take them away from their current mortgage. We will only provide solutions if we find it may benefit them.
Yeah, if it makes sense.
If it makes sense. We never want to put a customer in a worse position to what they're already in.
Of course, yeah.
We always want to benefit them, which is what the whole best interest duty is all about, is to make sure that you've got the best interest for your consumer, no matter what the application is itself. So I think it's quite important to understand that, when it comes to interest rates, especially, during this refinancing fixed rate mortgage, Cliff, I think it's really important to kind of reach out to, your trusted
100%.
broker or advisor to see what your options are.
There's some ridiculous numbers.
Yeah.
Those people coming off fixed rates.
Mate, it's huge.
I was speaking to my uncle the other day, and he's still, believe it or not, he's still with Me Bank at 1.99% fixed.
Wow. What did you do? 5 years?
Did it. And back then, I was just like, why didn't everyone do that? But back then you're like, nah, it's going to keep going low. It's going to keep going low. But 1.99%, when he comes off that, it's just going to be, what's that? 3-4 times the repayment, probably.
Literally.
3 times, yeah.
And that's what we're starting to see households reassess their financial position. We're starting to see.
Have to.
You know what I mean? We're starting we work with a lot of real estate agents, and we're starting to see a lot more stock coming onto the market. I think in the next week or two, we're going to see almost record high auctions happening throughout, since COVID, which is just an indication of people, coming off their fixed rates, freaking out, maybe thinking, paying an extra 3-4 times the repayment is going to obviously affect them and their livelihood.
That's concerning. Is do you think property prices will go down because there's just an oversupply of people selling?
Not necessarily. I think we have a massive supply and demand issue, and we are expecting to see, I think we're almost at a record high with property value itself. I think the median house price at the moment is above 1.1 or 1.2 million just in Sydney alone. Whereas, looking pre-COVID, you're looking much less than that. I don't think the property market will be slowing down anytime soon because of the supply and demand issue we have. We are expecting almost 800,000 immigrants to come before the end of next financial year. So where are these people going to go?
100%.
When we've already got a housing supply.
Invest in Perth. What do you think, huh? Invest in Perth,
we're seeing a lot of it. Yeah? We're seeing a lot of it. We're seeing a lot of people going out there, house and land options, people going to buy land for 200-300 grand, another 300-400 grand to build. We're seeing the increase in value there once it's complete, which is a great investment strategy.
Mate, the yield.
But the yields are unbelievable.
Can't believe it.
Yeah, it's
I looked
amazing.
into it and I just couldn't believe it.
Yeah.
But then you just don't know, right? You do your research, or for me anyway, that's why I was curious to see, are you seeing a lot of it? Because on face value, it looks like a great option for an investment, because cash flow positive,
100%.
or at least cash flow neutral. You don't have to worry about it.
Yeah.
And, all these things like the supply, 800,000 people, where are they going to go?
Yeah.
Sydney is already full. Everywhere's already full. Surely they're going to, come to Perth, it might be I don't know. I just
look, in them regional areas, especially out in different states in Australia, the capital growth isn't as much as obviously what Sydney is, but
it could be.
100%. But you're talking yields that are beyond what the yields are in Sydney.
Yeah.
So I think from an investment,
you got to know what you want.
Put the investment cap on for a second. I think you got to do your homework in understanding, what do you want to achieve by getting into the investment property. I think buying an investment property in Sydney, it's good. The yields are going to be low, but the capital growth,
and that's what you want, really,
will be good over time. But as a new investor or someone that's just looking to, they got 100 grand and they want to invest into something and make their money work for them, I think long term, and investment's always long term. I think long term, really do your homework and understand what options are available out them areas for sure.
Because it's really hard to buy an investment property in Sydney at the moment. Whenever someone that doesn't have a property is saying, look, I want to buy an investment property. I'm saying to them, look into state.
Yeah.
Like surely, like if you look at the booms that's happened in other states, you know, I still think Perth has yet to hit its boom, and with everything going down there, and you're getting properties 15 minutes from the CBD, close to the water, paying itself off. Like surely it might pop off. You know what I mean?
Definitely.
Whereas, and it's paying itself off. So if you invest somewhere here, first of all, you're going to have to spend a lot more money, a lot more money, and you're gonna have to fork out a lot from your pocket to just service the thing. You know what I mean? Because you'd be lucky to get a 4% yield,
100%
investment property in Sydney. Yeah, you're talking 6-7%, maybe 8% in Perth and other interstates. So that's why I was curious, because myself, I just thought like, it's definitely something to consider. If it depends on every person's different, but you know, for someone to try to get in the property market, not for a property to live in, but if they want to buy an investment property. I think, I don't know, for me, I think interstate is a good option.
Yeah, definitely. Yeah. And look, what we're starting to see at this time as well is people that have built equity in their properties over the last 2-3 years, which is a significant increase I think we experienced a 30 or 40% increase in value in housing value post COVID, and I've seen a lot of booming areas where they bought for $1 million and now it's worth 1.5 million. So ideally, the equity available in their properties at the moment, which they're not necessarily aware of because they haven't done a valuation or they haven't reached out to.
There's opportunity.
There's opportunity there for them to engage what they currently have to pursue an investment strategy to ongo these types of purchases.
It's tax-free too.
Exactly. And a lot of people don't understand that, there's a tax deduction, when you purchase an investment property, or that the interest.
Drawing equity out of the property,
100%.
that money is tax-free.
100%.
Buy another property. Like definitely. Just, if you can, it's definitely something that you should be doing. Consider doing anyway.
Going back to the literacy and the education behind it all, ideally there's not enough. And like I said, a lot of people don't understand that they can actually utilize this.
Get on the camera more, Josh.
Yeah,
give us more content.
I'm trying.
We want to learn more.
But you can reach me on Joshua Jones Consultancy.
Yeah, that's it. Done.
But look, at the end of the day, like the overall picture in the mortgage space is, look, there's consistently a lot of policies coming in place where it's assisting you to actually get into the market, or rather help your current financial position. But ideally, that's what we're here for. We're here to help you understand or understand what you want, what your goals, what your objectives are, and obviously paint out the right solution and a picture and a proposal for you to understand where you want to head. Yeah. So, yeah.
Beautiful, man. Thanks for coming on, Josh.
No, my pleasure. Thank you so much.
You've been a very good friend of mine for a long time, and we're going to continue being very good friends. And seeing your journey has been amazing, and I wish you all the best. And I know you're going to keep killing it, mate.
Thanks, Louis. Appreciate it.